I told you so. Imagine I start the video off like that. What's going on, guys? It's Ricky with TechBot Solutions. And in today's earlier video, I made a video about, hey, I think that the markets are potentially setting up for a bull trap. At that time, markets were bullish. Markets were in the green. But I saw a very similar setup, and I wanted to make a video sharing the risk that I saw kind of setting up when it came down to this bull trap. I've made numerous videos like this before, and I have not been right. I like to be very open with you guys. I'm never afraid to share my opinion because I always share the why. I always share that I don't have to be right, but I do it just for the purpose of, if it does end up happening, I hope to save beginners a ton of money if direction ends up turning against them. And I'm very happy that I made the video that I made earlier today, because if we look at how the NASDAQ market played out, markets were pumping, they became overbought, and literally, I want to say like 5-10 minutes after, and again, it never works out like this for me. You guys can ask my LPP team. I'm either always very early to selling or very early to buying. Nonetheless, markets became overbought. They peaked. They were testing previous highs. It was a textbook setup, and then they began to dump. How did I know this? No, it's very simple. What was the issue, or what has been the issue that hasn't been causing a lot of selling pressure in the market? This trade war. Is the trade war over? No. Is the trade war getting better? No. Yet markets were recovering. It didn't make sense. Like, common sense isn't so common nowadays. And don't get me wrong, the stock market does whatever the stock market wants. We've seen that happen many times. But we were waiting on very important news today. And that was the response from China of what the US was going to do with them. And then the US came out with a 104% tariff on China. So yes, I am not surprised that once that got announced, of course, markets began to dump because they didn't factor that in. They thought that the markets were going to get better. And don't get me wrong, based off of yesterday's performance, markets were eager for them to recover, right? That's what we talked about yesterday. This showed how eager the markets were to recover when there was this fake news of a 90-day pause on tariffs, right? That ended up being disclosed as not true. And then markets corrected themselves. But in yesterday's video, I shared what I learned from that. And it was that markets are eager for them to recover. So if things are not getting worse, then technically they might be getting better for the stock market. Because remember, the market wants to recover quick. So as the markets began to recover, almost the opposite of yesterday. Yesterday, the markets opened up in the red, and then all they did for the remainder of the day is pretty much recover. If you tuned on into my live trading session with my LPP team, we literally talked about this. The markets opened up green. They were recovering for no reason, and it almost made sense that it was going to give it all back. I was like, imagine it does the opposite, or it's set up to do the opposite of what it did yesterday. It opens up in the green and ends up in the red. And that's exactly what ended up happening. Let me make this very clear. I am not right 100% of the time. I never pretend to be. I always share my opinion, and I have been wrong many times. But you guys know for a fact, regardless if you like me or not, that when I share my opinion, I share it and I share the why behind it, why I think something is going to happen. I'm never afraid to share that because it comes from a good place and it comes with the intention of not getting bull trapped. And that's exactly what I said in this video, is that, hey, this is what I think is being set up. We're still waiting on the news from China and what's going to happen with them. And if it's negative, don't be surprised if markets pull on back. But I reminded people that, hey, you guys are adults. If you want to continue to hold, hold. But don't be surprised if markets do begin to change direction, that, again, you at least have a plan B in taking profit or mitigating risk so you don't bag hold it all the way back down to previous lows. And I'm so happy that I shared that, of course, with my LPP team, but of course with all of you guys that are on YouTube. And based off of the feedback that I got from a majority of you, a lot of you guys, I was actually quite surprised. A lot of you guys were kind of like standing up for me for the few people that were bickering in the comment section. Because trust me, I would be mad too if I was bag holding from, highs of 442 on QQQ or whatever stock it is that you're bag holding. Let me make this very clear. There's nothing wrong with wanting to be invested into the market right now. My long-term portfolio, that's all I'm focused on right now, is buying in very small increments, because I do agree that markets, big picture, are more oversold than they are overbought. But we have to respect that things can get worse before they get better. So do not use margin and stay light if you can't tolerate the time that it's going to take for the markets to recover. Markets are very volatile and they're desperate. They're looking for any reason to recover, but they're very delicate that anything can continue and causing them to sell off. So I wanted to share a few things with you guys today. Again, I hope that it earned your thumbs up and maybe you can consider subscribing. And for those that want to watch me trade live tomorrow, second link in the description down below. But today, over $1.5 million was lost from the stock market today. That is from when it opened to where it closed. 1.5% according to that report. So supposedly we just witnessed the biggest bull trap of 2025 from the S&P 500 erasing 4.5% and an early rally or within 3 hours. Between 10:30 and 3:15 p.m. the S&P 500 erased $2.3 trillion of market cap. Bull traps are textbook signs of a bear market. Sure, I don't think it's that deep. I think that just like we talked about it yesterday, markets are eager for markets to recover. They're looking for any reason to recover. I wouldn't be surprised if markets try to recover tomorrow, right? But we have to understand, we just have to respect that this trade war is still present. There's still a lot of negotiating going on, and those things are going to take time for them to get factored into the market. And I said this within my live trading session today. The reason that we have these very significant sell-offs is because markets recover before they're supposed to. Where if they never actually tried to recover, if you look at where we closed at and you looked at where we were at yesterday, there's really no change. So big picture, there's really no change from yesterday and today. But it's because markets aggressively recover, these bull traps form because they're recovering for no reason, because things are not actually getting better, that it does set up, and again, I don't recommend this for beginners, it does set up bull traps, which I love shorting. And of course we shorted it. We made a ton of money shorting Tesla as markets began to tank because it was a textbook setup. Obviously, if you're part of my LPP team, you got all of my updates, you got to see me do it live, and it was a very enjoyable experience because again, we knew exactly what the previous support range was. We knew exactly based off previous highs where it was a previous resistance, and we just had to wait for confirmation. And when direction was favorable and the news was confirmed and the selling pressure was kicking in, we just step on the gas, we watch the market bleed, and we make money as markets sell off. But again, shorting is not for everyone, especially not for beginners, and it does come at a greater form of risk. But I just wanted to make sure that you guys were aware. The other thing that I wanted to disclose is the day began green, as you guys can see by the heat map of the S&P 500. And then, of course, however, it did not end that way. And the main reason behind this is that President Trump signed an executive order today, officially raising tariffs on China by 104%. And this is supposed to take into effect by today. Supposedly, one of the news that I saw, I don't even think I was supposed to share this. So the largest economy in the world is levying a 104% tariff on the second largest economy in the world at 12:01 a.m. tonight. S&P 500 PE ratio is still 18x. Just talking about how over-exaggerated or overextended the markets are. And then China responds to U.S. tariffs by selling another $50 billion in treasuries and keep selling. So when there's a lot of selling pressure, these, treasuries and the rates begin to increase, obviously not putting the U.S. in a very favorable position when it comes down to our interest rates. So supposedly this is supposed to encourage the Federal Reserve to start cutting interest rates sooner than later. Nonetheless, again, the grand scheme of things doesn't really matter. The big focus right now is this trade war, especially right now between the U.S. and China. Supposedly, and again, this is what you guys are welcome to form your own opinion. I'm not here to convince you. You guys are all adults. It doesn't really matter to me. I'm learning a lot throughout this entire process, but supposedly these tariffs are bringing in about $2 billion or are going to bring about $2 billion a day when it comes down to revenue because of all these different countries and what it is that's being implemented. I don't know if that's exactly true, but the one thing that I also want to remind you is, I guess it is kind of scary because you're seeing how this is impacting the market. I find it to be exciting because I'm learning a lot. I'm learning a lot on how markets react, and I'm learning a lot about tariffs that I wasn't completely aware of before. With that being said, it's like I always try to ask the question about why. Why is Trump doing this? There has to be a reason, right? Because everyone is kind of turning against him. They're not really big fans of what it is that he's doing it for. But you have to think about it. He's not enriching himself by implementing these tariffs. He's not enriching his billionaires that are impacted the most by this. So you really have to ask the question, why? Well, the only thing that logically makes sense is that he truly does believe that this is a way that the US can either renegotiate, generate more revenue, or create a more fair trade deal with the series of different countries that seem to be more favorable for the US or hopes to be more favorable for the US. So those are the thoughts that I've continuously asked myself of why would he do this? Why would he continue to do this? And it's truly not benefiting anyone, especially not the billionaires. Because if you really think about it, it's the billionaires and the millionaires that are impacted the most by the markets selling off the past 2 to 4 weeks, even the past month to 2 months. The thing that I want to remind you is most Americans, although it says like 60% of Americans are invested in the stock market, that's invested. They own a very small amount of the entire market as a whole. I think it says like the top 8% own about 80% of the companies that are publicly traded. So it's the richer or the upper class that obviously are impacted the most. So why would he be impacting or having a negative impact on them if he's trying to enrich himself and his friends? So I just want you to take maybe a little bit more time to think of, hey, maybe the intentions aren't bad. I'm not here to say that it's going to work out exactly as he might be planning it to be, but all I'm encouraging to do is maybe to give it an extra thought of why would he be focused or so fixated on setting up all these tariffs, hopefully in the favor of the US and the American people. Not saying that it's going to work. I'm not saying that it has to happen now. I get it, that it's very volatile and it does instill a lot of fear. But for people like you and I, this is kind of exciting, right? Because you have to think about it. Unless you have millions and millions of dollars invested into the stock market, you probably were not impacted much. Your day-to-day life has not changed. Right? For the average American, they have not been influenced nor impacted by the markets dropping because, again, most Americans are not influenced by the stock market because, again, the stock market is not a direct representation on how the American people are doing. So I want to remind you of that this is exciting. There is a lot of interesting things that are going on. This should encourage you to maybe take a little bit more time to learn more and to view it as an opportunity if you see it as that. I know I am, right? And I'm really excited to get invested, get more invested, and pick up some good deals and companies with dollar amounts that I can tolerate, that I see that can be good investments for a long period of time. So just wanted to share my 2 cents with you guys. Wanted to congratulate everyone that killed it, everyone that took profits at those overbought levels, and everyone that shorted all the way down to the downside. Let's take it day by day. There's a lot to learn, and I'm just here hopefully to encourage you to move that needle a little forward every step of the way. So excited to follow up. I hope to see you for tomorrow's live trading session. Second link in the description down below. And if you have any questions, feel free to comment down below. Like always, let's make sure that we end the year on a green note. Take care, team.